There is only one company on Earth that Nvidia truly has to worry about. In the last year, its stock has nearly tripled, up almost 200%, as Wall Street bets it will become the great challenger in artificial intelligence. But here's the catch. It now trades at a price that assumes it already is. Meet AMD, the number 2 in AI chips, and one of the most important bets in the entire market. So the question is simple. Is AMD the credible rival that finally cracks Nvidia's monopoly and grows into its price, or a great company whose stock has run far, far ahead of reality? The answer comes down to one number. Stick around, because part 3 is where most people get AMD wrong. AMD is roughly an $800 billion company. We'll run this in 3 parts: why the bulls believe, why the price is scary, and the chart. Then a verdict, and the one metric that settles it. Let's start with the bull case because it's genuinely strong. 1. The data center is on fire. Last quarter, AMD's data center revenue jumped 57% to $5.8 billion, powered by its EPYC server chips and its Instinct AI accelerators. Total revenue grew 38%, and the company guided to $11.2 billion next quarter. That's around 46% growth. 2. The roadmap and the customers. AMD just laid out its MI400 chip and its Helios rack platform, its most serious answer yet to Nvidia. And crucially, it has landed marquee customers. The first deployments include OpenAI and Meta. When the biggest names in AI are willing to build on AMD, that is a real validation. 3. The setup. For years, this was a 2-horse race with only 1 horse. If the AI chip market is going to be worth hundreds of billions, the world wants a credible second supplier, and AMD is the only one that qualifies. Wall Street agrees. 51 analysts rate it a strong buy, with an average target still well above today's price. A booming data center, top-tier customers, and the only real alternative to Nvidia. So what's the problem? The problem, once again, is the price. AMD's stock has already priced in years of that success. After a nearly 200% run, AMD trades at around 58 times forward earnings and over 170 times trailing earnings. This is not a cheap, undiscovered stock. It's a crowd favorite, priced for a future where it wins big. And that's the risk. AMD is being valued like the co-champion of AI, but the reality is more humble. Its AI chip revenue is still a small fraction of Nvidia's. Its margins, around 56%, are well below Nvidia's 75%, because AMD is often the cheaper second-choice option, and Nvidia's real moat isn't just the chip, it's the software, the CUDA ecosystem that every AI developer already builds on. Dislodging that is incredibly hard. So AMD has to execute almost flawlessly, ramping the MI400, winning share, and improving margins, just to justify a price that already assumes it will. So here's the scorecard. On one side, 57% data center growth, OpenAI and Meta as customers, and the only credible number 2 in AI. On the other, 58 times forward earnings after a huge run, margins far below Nvidia, and a software moat it hasn't cracked. The great challenger or a stock ahead of itself. For a tiebreaker, we go to the chart. Fundamentals tell you what, technicals tell you when. And AMD's chart is, in a word, hot. The stock is in a powerful uptrend. It trades above both its 50-day and 200-day moving averages, and the 50-day is above the 200, a classic bullish setup. Over the past year, it's up nearly 200%, but momentum is now stretched. The relative strength index has pushed up toward the low 70s, which is near overbought. In plain English, the stock has run hot and fast, and it's vulnerable to a sharp pullback if the news disappoints. The levels that matter. On the way up, resistance sits overhead around $540 and then a zone near $555. On the downside, the key support is the 200-day average, down near $465. As long as it holds above that, the long-term uptrend is fully intact. Lose it, and the run could unwind quickly. So the chart says, a powerful trend, running hot, near overbought, with a lot of good news already priced in. So great challenger or a stock that's ahead of itself. Here's the honest framework. The bull case is real. If the AI chip market grows as expected and the world genuinely wants a second supplier, then AMD is the obvious winner of that role, and today's price could still prove cheap. This is a fantastic company executing at a very high level, but the bear case is just as real. You are not buying AMD's present. You are buying a near-perfect version of its future, one where it takes serious share from the most dominant company in tech. If that share gain simply arrives slower than hoped, a stock priced this richly has a long way to fall. Which brings us to the one metric that settles the entire debate: AMD's data center revenue growth. That is the direct scoreboard for whether it's actually winning AI share or just talking about it. Watch that number every quarter. As long as data center growth stays strong and its AI GPU ramp accelerates, the challenger story is real and the price is justified. But the first quarter that growth clearly cools, that's the market's signal the share gain dream is fading. And for a stock priced for perfection, that's the number that matters most. Pair continued data center strength with a hold of that 200-day average, and the challenger thesis is intact. Until then, AMD is one of the highest quality, highest expectation stocks in the market, a great company that has to keep being great just to stand still. A stock to understand completely before you ever touch it. That's the full breakdown, the growth, the customers, the valuation, and the why behind all of it. If this helped AMD make sense, subscribe. Every week we break down one company on Wall Street exactly like this so you can invest with a framework instead of a feeling. The free breakdown sheet with all the numbers is linked in the description. Quick but important. This channel is for education and analysis only. It is not financial advice, and I'm not your financial advisor. Do your own research or talk to a licensed professional before investing a single dollar. What company should we break down next? Drop the ticker in the comments. See you in the next one.